If you're self-employed, give me 90 seconds to explain this to you. If you try to buy a home and you go into a cookie cutter bank or credit union locally where you live, you're going to get cookie cutter loan programs with cookie cutter solutions. You're going to have to give them your tax returns. Well, you are self employed. One of the biggest benefits of being self employed is utilizing tax write offs. So you give them your tax returns. They look it all over and say, "Hey, with your write-offs and deductions, you qualify for this." And you're like, "Come on, I make $300,000 a year." Yeah, well, you write off $200,000, so your usable income's only 100. Okay, cool. That may buy what you want, and that may be great. But if it's not, you need to look at a bank statement loan. A bank statement loan goes off just that, bank statements, no tax returns needed. You do have to file your taxes. I'm not advocating for not filing your taxes, but you don't have to provide them to me when it comes to getting a home loan. You can do this for primary homes, secondary homes, and investment properties. And I don't care about your tax returns. I look at your deposits over 12 months. I take out a 25% expense factor from that added up deposit amount. And then whatever we're left over with after the 25% deduction, we then divide that by 12, and that's your usable monthly income. The next thing people always say, well, the interest rates are higher on a bank statement loan. True, they are because they're a creative financing option. But let me tell you why that shouldn't matter. If you take the scenario we just talked about, you make $300,000, you write off $200,000 and you net 100. In order to qualify for what you want, if $100,000 in qualifying income doesn't work for what you're trying to buy, you have to reduce your write-offs next time you file taxes, and you have to do that for 2 years. So if you need $200,000 of income to buy the $1 million property that you want, you have to write off $100,000 less per year, which can increase your tax liability owed to the IRS by tens of thousands of dollars. So let's just say it like this, and it's going to sound exaggerated, but it's the truth. If you're buying $1 million home and a bank statement loan is a half a point interest rate higher, that might be $1,000 more a month in interest. That may be $12,000 a year by adding that half a point interest rate on a bank statement loan and $1,000 more a month. Oh. But what if you want to go conventional because you want to save that half a point in interest? That is reducing your write offs by $100,000. You might owe the IRS $60,000 or $40,000. It doesn't matter. You're going to owe them tens of thousands of dollars based on reducing your write offs. So while you may pay $12,000 more in interest per year, what would you rather pay? $12,000 in interest in a year or $50,000 to the IRS? You have to look at the big picture. Yes, interest sucks. You're going to pay interest on everything: credit cards, student loans, personal loan. It doesn't matter. Unless you operate 100% cash, someone somewhere you're paying interest to. So, with that being said, I digress. If you're self employed, please look into a bank statement loan. My team and I have been consistently for the last 6 years, not only self employed ourselves and utilizing these loans for our investment properties and our second home and our primary. We've consistently been one of the top lenders in the country for self-employed individuals. If you want to have a conversation that's no pressure, I'm not a pushy sales guy, you can reach out to me. All my contact information is in the description. I'll answer any questions you have. On top of that, at my company, we can help in 49 out of 50 states. The only state we can't do loans like this in is New York. Thanks for tuning in. We'll see you guys on the next one.